thank you so much for coming to today's webinar, where I'm going to be talking about how you can look after yourself when you don't have an employer to do that for you, because we don't think about all of the different advantages that there are when we're self-employed from this point of view. So I'm going to just start a little bit about myself. So I'm Naomi Haynes. I provide people with financial advice in a down-to-earth and easy to understand manner, and just help people get control of their money and their finances and empower them along their financial journeys. So when we're looking at different areas of finance when we're self-employed, there are three main areas that are important to have a look at. Those are pensions, those are also sick pay, and those are benefits. Now, when we have our own businesses, when we're self-employed, there's a lot of advantages. We have great flexibility. We really are running our own businesses, and it's a fantastic way, a fantastic career, but we don't have that employer there to auto-enroll us into a pension. If we're sick, many employers pay sick pay. And in fact, if you're sick and your employer doesn't pay sick pay, you will get statutory sick pay from the government. But if you're self-employed and you're sick, you don't receive statutory sick pay. So there are lots of areas that I think it's important that we look to cover, and how we can look after ourselves, because this isn't a situation where, well, we don't have an employer, therefore, since we don't have an employer, we can't have these. That's absolutely not the case for most people. So let's crack on and let's go through and see what those ways are. Now, I'm going to start off with looking at pensions, but actually before I do, I thought it was important to actually talk about what is a pension. So a pension is just a way of saving for your future. Most pensions now in particular are called defined contribution pensions or money purchase pensions. I actually call them money pot pensions, and you can see in the picture I've got a pot of money. That money pot pension is literally does what it says on the tin. You have a pot of money that is wrapped in a pension wrapper, and that pension wrapper has several advantages, and that's what makes it a pension. So why are pensions brilliant? Okay, that wrapper that's called a pension, that makes it into a pension, is because there are lots of advantages. So you get tax relief from the government in a pension. Now, what that is that money that goes into a pension has certain tax advantages. You either get it topped up by the government if you're putting it through a private pension, or if you have a limited company, you basically take money from your limited company, put it in your pension, and there's no tax. So the tax relief is very valuable. Everything that's invested within your pension will grow free of all UK income and capital gains tax. You get the advantage of investing for the long term. Yes, you can't access your money until you're at least 55. That is going to be going up soon, so it's worth bearing that in mind. But you get the advantages of investing for a long time without the temptation of accessing it sooner. And you also get a tax-free lump sum at the time when you take the money. You don't have to take the tax-free lump sum, but there is that as an advantage if it suits you. You also can have employer contributions. So for example, if you've got a limited company, you can contribute in a very tax efficient way. And also what a lot of people don't realise is pensions are brilliant for estate planning. I know it's a long, long way away for probably most people watching this, but to know that pensions do not have inheritance tax on them can make a big difference when looking at your finances for the future. So let's just look a little bit more detail at tax relief. So if you are going to put £100 into your pension, depending on your tax situation will depend on how much you're actually paying into it. So you can see in red, that is how much you're paying into your pension to get £100 in there. And each of those different columns are dependent on your tax rate. If you put £80 into a pension, tax relief is £20. If you put £60 into your pension and you're a higher rate taxpayer, your tax relief is £40. And you can see it's £45 for a top rate taxpayer if you're investing £100 into a pension. So it can be very valuable, the tax relief that you receive. Now, depending on your situation and depending on the type of pension and whether you've got a limited company or you're a sole trader, will depend on the exact mechanics. So obviously, if you've got any questions, you can speak to a professional or you can just ask me, because I will be able to help take you through it. Now look at these stats. So from just over 2 years ago, the Exeter did this survey and had a look, and it came out with 62% of self-employed people have no pension savings. Now, that's a huge percentage. I have to say that it's almost double those that are employed. Now, 32% of employed people have no pension savings. I would suggest that that 32% number may actually be falling, and where it will reach a bottom will be those people that are employed, but they do not qualify for auto-enrolment in pensions. So 62%, so almost 2/3 of self-employed people have nothing in their pensions. Really important to think about that and think about what that means for the future. Remember, we're not going to be working forever. Now, I want to talk about the gender pension gap. We've seen a self-employed pension gap already from the statistic earlier, but there's also something called the gender pension gap. This is the difference between the average retirement savings a man has at the time to retire and the average savings a woman has at the time to retire. Now, these statistics can vary widely. So what I would say about the gender pension gap is there is a large gap. We can look at various different statistics and they can range from the shocking to the outright incredibly shocking. But when it comes to the fact is there is a gender pension gap. So whoever you are, we've established that if you're self-employed, you've probably got a bit more of an uphill battle when it comes to your pension because you've got to sort it out yourself. If you're a woman and you're self-employed, bear in mind that you're starting on the back foot here when it comes to the statistics. So don't be one of those statistics. Let's try and reduce that gender pension gap. What I would say is that the average person, no matter what gender, is unlikely necessarily to have enough to see them through retirement. So, and particularly if you're self-employed, you may be starting with a much lower pension than someone employed. So it's just a bit of an incentive to really have a look at that and make sure your future self will thank you in the future rather than chastise you for not looking into it. So I look at pensions, by the way, as being a business success criteria. Look, we are all running our own business. If you're watching this, chances are you're running your own business. Do you celebrate when you get your tax bill at the end of the year? Now, I do. And I know that sounds crazy. What that means is that I have been successful enough in my business to A, earn more than I am spending, and which for a lot of business owners, that's just brilliant. You're creating value. But B, I'm earning more than the personal income tax allowance as well. What that means is that my business has reached a level of success, so successful that the government's going to start taxing me on it. So celebrate if you're paying income tax. I look at this as having a pension as being a business success criteria as well. So that's just what I wanted to mention, that actually paying income tax, but paying into a pension they are a sign of a thriving business. So if you've got a pension, or if you're thinking about doing one, they can help you. Also bearing in mind that if you are paying income tax, paying into a pension will reduce that income tax as well, or get you your tax relief. Okay, so you're thinking about starting a pension. How much should you be putting in? That's kind of how long is a piece of string. Auto enrollment, if you had an employer, the employer would be putting in 3% of your earnings, of your salary, and you would be putting in 5%. So that's a total of 8%. You don't have that employer to put the 3% in with you. So my first question for you is, can you match this? If you were employed, you would be, whether you like it or not, you would definitely have 8% going into your pension. What I would say is, when you have a salary, you have a regular amount coming into your bank account every month. So putting 5% and 3% in each month or over the year becomes a lot easier than when you're self-employed. Most people that are self-employed, we will have erratic income. You have good months and you have bad months. So what I would recommend is look at that 8%, look at it over a year. Think about what's the minimum can you have going out per month, if there is one. Now, I know some businesses are very feast and famine, and if you do have a few months where there's absolutely nothing coming in, you may not want to set up something regular on a monthly basis. Maybe you want to set up something regular on a quarterly basis, or maybe you want to set up a minimal amount that's doable. We've all got regular amounts coming out of our bank accounts. We have that for our businesses and for our personal lives, whether it's a mortgage, whether it's utility bills, or for our phone. So can you put a minimum amount in each month? And then perhaps as we head towards the end of the tax year, which we're doing right now, have a think about, is there a lump sum that you've accumulated that you can top up? This is my busiest time of the year, because I have a lot of my self-employed business owners looking at their tax situations, looking at their business, looking at what they've accumulated and topping up over and above their regular contributions, however small or large they may be, because it suits them. And they're topping them up before the end of the tax year and boosting their pension. So that's what I'd say. Everyone's different. If you're really not sure or it feels overwhelming, there are professionals like myself that can help you put a plan together that is doable and that will help you get your pension growing in the way that works for you. So celebrate if you have a pension, and celebrate when you contribute into it, because that means you are doing great. You're not just doing well in your business, but you are also looking after your future self, and you're also taking back some of that tax as well that you would have been paying if you hadn't have paid into your pension. Right, so talking about the gender pension gap, this really counts for anyone when you're thinking about how to boost your pension savings. So I've got a list here. I'm not going to go through everything in detail. Feel free to either write them down, ask me for a list, or take a screenshot, whatever you want. You can help your future pension accumulate with financial planning, obvious reasons. You should look at any pensions that you may have from the past. Even if you're self-employed now and you don't have a pension, a lot of self-employed people have been employed at some stage in the past, meaning there could be a pension out there that is either lost, is either sitting there doing nothing, and maybe needs a little bit of attention. Maybe it's not working hard enough and in the right way for you. Have a pension review. Know what you've got, where you've got it, okay, and what it's doing for you. How is it invested? Is this doing what I need it to do? Don't forget your state pension. If you are working in the UK, and we're talking about pensions here, and you've got a business in the UK, you are going to be able to accumulate rights to have a state pension when you reach state pension age. There is something called a BR19, but if you just Google state pension forecast, you will go to the government website where you can see how much of a state pension you have accumulated so far and how much you need to accumulate to get to a full state pension in the future. Okay, now I can help you with this if you wanted to, or get some professional advice, but it's really quite simple. You either fill out a form and return it, or if you've got a government gateway login, you can actually find it in around 20 seconds. I've timed myself because I do this regularly myself, and just to see. If you have 35 years of national insurance contributions, you will be entitled to a full state pension, and that's currently just over £9,600 per year. So that is worthwhile having, because it's that amount of money for the rest of your life. So definitely make sure you are on track to getting that. If you receive child benefit, by the way, or at least receive child benefit in principle without receiving the amounts, if your child is aged under 12 years old, you will automatically accumulate state pension, national insurance contributions. So do bear that in mind, so a lot of people don't necessarily claim child benefit, but it will help towards your child it will help you towards your state pension. Also, yes, we're looking after ourselves here, but when it comes to closing that gender pension gap, there are children's pensions as well. You can start a pension from the day that you're born. It doesn't have to be a mountain of money to give them a start and to help them accumulate. And if we were to do that for all of our children, whatever their gender, then we can already start to address those gaps that are out there. I always say, know your number, know what your pension provision is going to be. Really important to know what it is. Also bear in mind that even if you aren't necessarily earning enough in your business, if you're thinking, you know, I'm not sure if, even though I can contribute 8%, or if my business is just starting, you can also have your partner, I mean, anyone can contribute into your pension for you. So you can get others to help with that contribution. So if you have an uneven salary or income coming in, you can also help the other one on the lower income. When it comes to divorce, always think about pension. They tend to get forgotten, but pensions are also able to be shared during divorce. And all I say is talk about money. Don't let it be a topic that you just don't want to address or talk about. The more you talk about it, it doesn't have to be your innermost and financial information. It can just be talking about money topics, talking about what is a pension, talking about something in the news. And don't forget, you can look after yourself by getting protection, but I'm going to talk about that in a moment. So what is the probability that something's going to happen to you in the future that is going to drastically impact your standard of living? Now, what I've done here is I've got a couple of made up individuals just to see what the percentage odds are that something bad is going to happen before they retire. Now, Anita, she's 35. She's going to retire at the age of 68, which is her state pension age. Now, the possibility something bad is going to happen to her before she retires is 46%. Now, that's not great. Whatever we can say is, what any one of those situations that arises for Anita, it's not good, and no amount of money is going to change the fact that it's going to be very disruptive. But having protection in place can help her and those that depend on her significantly, and it could be quite game-changing. Now, Sam is a 50-year-old, and he's going to retire at the age of 67, which is his state pension age. Now, if you have a look at either of these, now, yes, there's a risk that they will die before pensionable age, but actually, if we start looking, what's the probability that they suffer from a serious illness? Now, that is 13 and 14%. That's quite a high percentage. And as we know now, there's a high likelihood that even if you are diagnosed with a serious illness, that with medical progress, that you can survive. So actually think about your business. What would happen in your business if you were diagnosed with a serious illness, or you had a major accident and an injury? Think about what would happen to your family and you. What would happen to the mortgage? What would happen to the business? And that's why I've put these statistics up here, not to frighten you, but to say, let's be realistic. I don't know what the future is going to bring, but I can prepare for it, at least financially. And actually, there's some big percentages here if you think about not being able to work for 2 months or more. Now, with our business, what would happen if you were sick and couldn't work for 2-3 months or more than that? What would happen to your business, and what would happen to your income? That's really important, and that's what I wanted to talk to you about in this next section. Okay. The first thing about protecting yourself is the importance of making a will. Now, I can't underestimate the impact not having a will have on you. Also, bear in mind, if you're watching this, chances are you've got your own business. Having a will, have a think about what's going to happen with your business and your clients and everything that you've built up. That may be something important to either leave in a will, or to make sure that you have got everything in place so that what happens with your business is what you want it to happen. Okay, a will is really important. It's for another webinar as well, but speaking to a solicitor or a will writer who can help you put together a will could and will likely save not just a significant amount of money for those that you leave behind, because just dying without a will, even if there's just no tax implications, it's just very expensive. But chances are could be some inheritance tax, whereas with a will there may not have been one. But it can be very distressing for those left behind as well. So my first thing is just make a will to make sure that everything you're working hard on is looked after, and is looked after in a way you want it to. Right, income protection is a form of insurance on yourself. It is basically sick pay. It's sick pay for the self-employed, but it's long-term sick pay. Income protection can cover you. It can cover you for shorter periods of time, but where income protection really comes into its own is if you are too sick or ill to work, it will cover you with a monthly payment until you retire, or until you get better, or if you pass away. So income protection is really valuable. So let's ask that question again. What would happen if you're too sick to work for a few months or more? What will happen to you? What will happen to your business? And think about that. Also, what would happen to your pension? Now, if you're too sick to work, obviously feeding yourself, maybe paying your mortgage is going to be a priority. But if you do have cover and you can cover all of this, then maybe you still at least be able to be paying into your pension, so that when you do reach retirement, you're not being penalised for having a gap of illness within your working career. So that's all I want to talk about. Income protection can come in many shapes and sizes. You can get very, very reasonable, almost budget versions, all the way up to the really top quality that's really kind of enhancing. And you can look at this in stages. So it will provide you with security, and it is your form of sick pay. And actually, people ask me, well, Naomi, what's the most important form of protection? And we're going to go through some of the others as well. To me, income protection, it protects you. It's the most likely protection that you're going to claim on, because the probability that you could be ill for a long period of time. It's actually quite high. But it's quite game changing that actually how long would you survive without your income, without your business paying you? So I sometimes think that income protection can be considered one of the more important protections out there. Critical illness cover, this basically pays out if you're diagnosed with a serious illness that's on a list from the providers. It will pay you out in a lump sum, or you could get paid out a certain amount per year, depending on the situation. What would happen if you got a diagnosis of something really quite serious? You can see here a 70% survival rate for heart attack in the UK, for example, whereas if you have a heart attack, you could get critical illness cover to pay you out. That gives you the opportunity to then decide, do I want to continue with the level of work that I have been at this rate, or will it just pay off my mortgage? So it will give me just a better standard of living, or do I need to make amendments to my lifestyle, to my home because of this? It gives you those options. It's looking after yourself. And life insurance, a lot of people do say, well, I don't mind, I don't care, I won't be around. If you have dependents, if you have people that rely on you, if something happens to you, do you want them to have a financial burden after you pass away? Now, a lot of employed people will have a death in service cover. Now, actually, if you are employed and you have a death in service cover, it may still not be certain enough to cover your mortgage, because you can move jobs and that death in service cover could change. And then by the time you finally aren't working or don't have a death in service cover, it may be very expensive to get that life insurance. So it's worth thinking about what situations will those that are left after you need to deal with financially when you're gone. And so here we've got some different options: funeral expenses or inheritance tax bill. A lot of people use life insurance to cover that, but then there's other life insurance that will cover things like your mortgage, so you can get it lasting not obviously until you definitely pass away, like funeral expenses or inheritance tax cover, but mortgage, you can get it to match your mortgage. Do you want those left behind to have to sell the house just when they're going through a really difficult period and mourning the loss? There is something called family income benefit, which is a life insurance, and what this does is it can pay for them for all their bills after you've gone for a set length of time, and it's just a backup plan. Really important to go through. Just really throughout our lives, protection is really important, because whatever we do, wherever we are, there's always something that could go wrong, that could really upset or upturn our own finances, or those that rely on us and those that we love and care about around us. If you have got a business, if you have a partnership, if there are others that you work with, or your business has employees, definitely think about also business protection, to protect your business, to protect your shareholders, to protect your partners, and to protect everything that you've worked hard to create. And that was really it. So I wanted to open the floor up to questions, if you have any. Yes, there are lots of different options, and they will depend on your health situation, your age, but also it doesn't always matter if you're a lot older, actually, because then the insurance is for a shorter amount of time usually as well, but it will depend on how much you're getting cover for, and it will depend on your age. But just to give you an idea of the range that I have organised income protection for self-employed people, I have organised it from £7 a month all the way up to over £100 a month. So it does depend, and there are cheaper options as well. And as you say, if the option for you ended up being too expensive, sometimes having a halfway house can be a good way to get there, or you may be just pleasantly surprised about actually how much you need and how much it costs to get you there. Now, because it's going to be the most claimed protection policy out there, they do tend to be quite stringent when looking through it. So sometimes you can get a policy, but depending on your family medical history or depending on your own health, there may be exclusions, but not always. And it just depends. So you don't know till you ask. So it's something that is really quite quick and simple, just to run some numbers. Thank you for coming. And obviously, want to do anything, what I've got here is just some other ways to hear about similar topics or just to get regular updates. I have a monthly email newsletter. I have a YouTube channel. This recording will go on my YouTube channel in the next few weeks, or you can book that financial empowerment call and we could talk about anything from income protection to whatever's important to you. So but I will send everything out, and thank you for listening.